So in this video, I'm going to talk about what's going on with our current real estate market. From what I'm seeing, many are jumping to extreme conclusions about the impact of higher interest rates, high inflation, and a potential recession on the housing market. Hi, I'm Tom Olsewski with Coldwell Banker and Team Olsewski, here with you, your Riverside County May market update. While the market is slowing, it is gradually evolving from its out of control, insane pace like we had last year to a normal seller's market where pricing and condition will be fundamental in finding success in getting a home sold. In housing, during a slowdown, demand falls, the active inventory rises, and it takes longer to sell a home. During the Great Recession, there was a glut of homes available to purchase, and it was matched up with muted demand. Consequently, home values plunged. In Southern California, there were nearly 120,000 homes available in 2007 compared to 20,000 homes available today, 6 times more. Today's missing ingredient that would lead to falling home values is supply. The number of homes on the market today is far below averages prior to the start of the pandemic, when values were still rising, but at a much more methodical pace. The Riverside County supply is currently at 3,803, a sharp rise from the 2,202 homes January 1st, but still far below the 3-year average prior to COVID 2017 to 2019, for this time of year of 8,622 homes. That is 127% more than today, more than double, even with a 531 home climb or 16% rise in the past couple of weeks. It's still off by 4,819 homes. That's a lot to make up just to get back to a more normal level. Keep in mind that the inventory levels since 2012 have been remarkably muted compared to the Great Recession, and it has become even more pronounced each year. With swiftly rising mortgage rates so far this year, demand, the prior 30 days of pending sales activity, began to slide after reaching an early peak on March 24th. When it normally rises, it continued to fall in the past couple of weeks, shedding 156 homes. It now sits at 3,013, which is 6% lower than the 3-year average prior to COVID, and 20% lower than last year at this time, but it is not going to plunge from here. Demand for all Southern California only went down by only 2% in the past couple of weeks. The housing market has already digested 5% plus rates, and there are still plenty of buyers looking to purchase at these higher rates, so-called higher rates. Demand is muted compared to its elevated levels of the last couple of years and lower than the normal levels prior to the pandemic. Yet it is matched up against an abnormally muted supply of homes available today. This has resulted in the Riverside County housing market remaining at an insanely hot seller's market level. The expected market time, the time it would take between hammering in the for sale sign to opening escrow, has risen from 21 days on March 24th to 38 days today, a 17-day increase. However, at 38 days, the housing market is still at an insanely hot level. Anything below 60 days is considered a hot seller's market. From 60 to 90, it is considered a slight seller's market. The market is balanced between 90 and 120 days. It does not become a slight buyer's market until the expected market time eclipses 120 days on the market. And values do not fall swiftly until it is a deep buyer's market above 150 days. Today's 38-day mark is nowhere close to a balanced or slight buyer's market. So here is the Riverside County housing summary. The active listing inventory increased by 531 homes in the past 2 weeks, up 16%, and now totals 3,803 homes, its largest rise since tracking began a decade ago. In April, there were 7% fewer homes that came on the market compared to the 3-year average prior to COVID 2017 to 2019 of 318 fewer. Last year, there were 2,404 homes on the market, 1,399 fewer than today, or 37% less. Demand. The number of pending sales over the prior month decreased by 156 pending sales in the past 2 weeks, down 5%, and now totals 3,013. Last year, there were 3,751 pending sales, 24% more than today. The 3-year average prior to COVID, again 2017 to 2019, was 3,214, or 7% more. With supply surging coupled and demand dropping, the expected market time, the number of days to sell all Riverside County listings at the current buying pace, increased from 31 days to 38 days. In the past couple of weeks, still an insanely hot seller's market, which is less than 60 days on the market, but rapidly cooling and the highest since June 2020. It was at 19 days last year, much hotter than today. For homes priced below $400,000, the market is a hot seller's market, less than 60 days, with an expected market time of 31 days. Those homes are hard to come by. This range represents 13% of the active inventory and 15% of the demand. For homes priced between $400,000 and $500,000, the expected market time is 27 days, a hot seller's market. This range represents 12% of the active inventory and 17% of the demand. For homes priced between $500,000 and $650,000, the expected market time is 33 days, still a hot seller's market. This range represents 26% of the active inventory and 29% of the demand. So for homes priced between $650,000 and $800,000, the expected market time is 37 days, a hot seller's market still. This range represents 19% of the active inventory and 19% of the demand. For homes priced between $800,000 and $1 million, the expected market time in the past 2 weeks increased from 35 days to 46 days. For homes priced between $1 million and $1.5 million, the expected market time increased from 46 to 63 days. For homes priced above $1.5 million, the expected market time increased from 69 to 93 days. The luxury end. All homes above $800,000 accounts for 30% of the inventory and 19% of the demand. Distressed homes, both short sales and foreclosures combined, made up only 0.4% of all listings and 0.3% of the demand. Very, very low. There are only 10 foreclosures and 5 short sales available to purchase today in all of Riverside County. Very, very low. So that's it for now. In a couple of weeks, I will dive deeper and review how the second quarter went for different cities and what we can expect in the next couple of weeks as we get into the hot late summer and fall real estate markets. So the bottom line is, as I stated before, that while the market is slowing, it is gradually evolving from out of control, insane pace like we had last year to a normal seller's market where pricing and the condition of the home will be fundamental in finding success with a sale. Thanks for watching, and remember, it's important who you work with.